Recently, I've seen 3 separate companies with insider buying to the tune of millions of dollars. In this video, we're going to explore which companies are seeing this insider buying and explore the case for why these insiders might be buying their shares. Now, as regular viewers know, I love seeing instances where there's insider buying because that means there's greater alignment with the minority shareholders. That means it's less likely for, let's say, management or insiders to screw over the outside shareholders, the ones who want to participate in a company's journey, because they have skin in the game as well, and they're buying the stock at, that as you can as well. And so when I see that dynamic, it gets me excited. Let's explore these 3 different companies right now. If you enjoy educational investment videos, you're watching Unrivaled Investing, please make a point of hitting that thumbs up, hit that subscribe button. First company, HIMS and HERS. HIMS is a ticker for, yes, Christopher Payne is his name, Christopher Tickerfer. And so the ticker is HIMS. I've actually talked about HIMS a few times before. You can check out the videos. You can see he made a purchase of around $2 million. That said, it does follow, tens of millions of dollars of insider sales. That said, if you do see a buy, it does mean people are generally like it. What's his background for Christopher Tickerfer Payne? Looking at, he's a board member. So he's a board member, so it's not like he's the CEO. He's a board member. Previously, he was door dashing. That's a lot of tips, $2 million. No. He wasn't. This wasn't from tips. This was from being the president and COO of DoorDash, being able to put that $2 million into HIMS stock. And why is, maybe what's the case? Well, just recently, it looks like his purchase was around the same time as this announcement. HIMS announces that they were providing access to the GLP-1 injections, this is the weight loss drug, the compounded semaglutide, for as low as $199 a month. This got the stock to rip around 30%, I believe, in a day, because the current existing solutions, Wegovy, which is semaglutide, this effectively the same product, is currently being marketed for around $1,300 a month. So $200 versus $1,300. How are they even able to do this? Because I'm pretty sure this solution is still on patent. When I dug through the Bloomberg article, it made the case that the reason why HIMS is able to get this discount, this $199 price versus the patented, it's not off patent yet, this 85% discount to Wegovy, which is, $1,300 a month. And look, some people are calling this like the wonder drug, because they're like, I'm losing weight and I'm, getting it on more and having babies. Like, this is amazing. And it's like, okay. Personally, I've a little personal journey here. I've personally lost about 20 pounds in the last few months, but that has not come from, needing shots. I mean, look, God bless if that's the path you feel like you got to do. And for some people, I hope it works out. I personally don't want to be stuck on, the recurring, like, oh, I got to do that, pay that $200 a month or whatever, or $1,000 a month. I've been doing the carb light approach, but hey, to each his own. Enough about my personal journey. Still got about 15 to go. We'll see. So how are they doing this? So what they're talking about is how HIMS can offer the prescription weight loss drugs because U.S. regulators have rules that allow pharmacies to make copycat versions of drugs in shortage, a practice that's known as compounding. This exists to make drugs available when manufacturers can't produce enough to meet demand, or when a pharmacist needs to tweak a drug's recipe to remove an ingredient that might cause an allergic reaction. So I think what's going on, and we're seeing the manufacturers of Wegovy, I believe that's Novo Nordisk, announce that they're spending billions of dollars to rapidly increase supply. So this does create this uncertainty of, will HIMS be able to keep offering this, because will the shortage exist, let's say, in a year from now? So this might just be a marketing stunt. I think management has come out and said, like, oh, we think this shortage could last for quite some time. But, this is the, it's you don't have the patent on it. You're offering a huge discount, and it seems like, and honestly, it seems more like a marketing stunt. Maybe it can work. And if you disagree, I'd love to read it in the comments below. So this is the first instance of the sizable insider buying, and I think a good reason why is because they call out that the current guidance that management has does not reflect the GLP-1 access on our platform, and we are not updating our guidance at this time. So this does reflect conservative guidance, and they're already expecting around 40% revenue growth and increasingly profitable. So, now you're maybe talking about 50-60% revenue growth based on, how, if you even suggest that, hey, this $200 per month might be a limited time. Hey, now's the time to get into it. Maybe, you do see, that, oh, I got to check out HIMS. This is the best price and it's only going to last for a while. So maybe you do see it, this growth really accelerate and then it really blows it out of the water. We'll see. So I think that's the case for HIMS. I've done prior videos on it. One investor was even calling out how they think it could be up 100%, or excuse me, not 100%, 100 times over time. So check out that prior video on HIMS. The next sizable insider buying is from SOFI, where Anthony Noto, the CEO, has been buying hundreds of thousands of dollars worth of stock around the current price level, just shy of $7 per share. And I've done a prior video on SOFI. I broadly like it. Interestingly enough, when you look at both HIMS and SOFI, I previously did own HIMS back when it was a SPAC, and then I sold out around $18, $20 a share. And so, interestingly, these two, SOFI and HIMS, with the insider buying that you're seeing, they both came public via the SPAC route, which is the sort of less traditional approach that allowed them to put out, hey, this is our expectations for the next few years. And both of these instances where you're having this insider buying and it had the SPAC route, they actually were the very, very, very few SPACs that exceeded expectations. And that's super important to understand because the vast majority of companies and management are overly promotional and say, hey, we are going to do this well, and then they come in here. And, to see management teams say, hey, we're going to do this, and then they drastically surpass it, that is, something that should be applauded and should get your investor attention. And that is something that SOFI has done over time. I mean, look at this fantastic revenue growth. That said, seen a significant deceleration, talking about only teens level growth in the current year. That said, profitability is improving significantly, seeing a huge increase in tangible book value. So, it is arguably, this company does have potentially hundreds of % upside. This was from my last video on it, but it just does depend on their execution. This is a hypothetical valuation framework for SOFI. I've broadly called out that I do like it. I'm just not sure if I'm ready to pull the trigger on it yet, just given that a key part of their business, as I talked about in the prior video on SOFI, is personal loans. And they've had to do this sort of dance saying, look, if credit conditions tighten, which we're just starting to see some indications of, I talked about that in my recent letter to my subscribers, you could see economic tightening, in which case, loan products, you want to make sure you have exposure to ideally less risky loans. And I'd argue SOFI's at the other end of that with personal loans versus, heavily focused on mortgages. That said, SOFI tries to sort of counterbalance that by saying, hey, we target the highest highest FICO score, credit scores, when we're underwriting these loans. So it's the people, maybe they're the households with 2 incomes and they're making a lot of money and they can easily cover these personal loans and the student loans, etc. So overall, I've liked the policies that I've seen from SOFI. I'm very curious to see how they perform through a whole credit cycle. All right, so let's go through insider buying number 3. But first, in full disclosure, this is not financial advice. I don't own positions at this time in any of the stocks I've mentioned in this video. That might change in the future. I'm still thinking about it. I'm getting up to speed on this third one here. Just learning about it. No. Also, quick plug. Just last week, Robin, a premium member of the Unrivaled Investing community, commented, this is a direct quote, "I'm an extremely happy customer of Unrivaled. The information services you provide to me are invaluable." This follows another subscriber posting on how, and this is another direct quote, "I'm currently ahead of my investing goals to retire at age 45, thanks to Unrivaled." So come check out Unrivaled Investing yourself if you're looking for compelling investment ideas. By the way, pricing for the premium tier is going up this month. So now is the time to lock it in. It will never be lower than it is currently for the premium tier. So looking at the third insider buying, this is Shift4 Payments, and we're seeing millions of dollars of purchases from Jared Isaacman around $68 a share currently is the stock price. He was buying around 67, 64. This is very interesting to see because when I once again go to AI Ticker Chat, by the way, all that insider buying information, that's completely free for users at AI Ticker Chat. So you can come check that out. The link's below. So there's the premium features that use AI that, you ultimately does become a paid feature, but for the insider transactions, financials, fundamentals, come check that out. Completely free. See the link below. First month is free, by the way, for you to explore these features. Looking at the top holders for Shift for Payments, and I see Jared Isaacman, he owns a boatload of the stock. He owns 100% of the Class B and Class C shares, owns, 500,000 number of shares of Class A shares. So he's a billionaire and, the founder of Shift4, I believe. And he's not only an entrepreneur, but he's also a bit of a risk taker. And you can see that with his prior experience. I think he went up on one of the first flights for the SpaceX Dragon crew. I think it was a charitable, like $100 million trip that he did, where he gave $100 million to a charity. And so I think Make-A-Wish, I think. And so, yeah, he's an interesting character. It's interesting to see what's going on here, but he's, clearly not only an entrepreneur, but an aggressive risk taker. What is Shift4 Payments? I want to understand. I want to get a quick summary. So it's a leading independent provider of software and payment processing, end-to-end payment processing, merchant acquiring services, looking at point of sale solutions. So I'm thinking this is a type of Clover type of business, providing a mobile-first technology solutions for stadiums, theme parks, entertainment venues, a frictionless commerce experience through mobile ordering, countertop point of sale. So they're enabling restaurants to accept transactions. And so then I ask AI Ticker Chat, this example of leveraging the AI, looking at the transcripts, the recent press releases, annual report. I go, why might the CEO founder buy millions of dollars in stock? What about for stock could be compelling, be very brief? And it jumps to it right here about it could be very compelling due to several factors, such as robust growth, a significant increase in EBITDA since its IPO, continues to expand its market presence across verticals like restaurants, hotels, and sports stadiums, talks about a disciplined capital allocation strategy, including opportunistic stock buybacks, strategic M&A, focusing on maximizing shareholder returns. So all of this smells good to me. When I look at their actual results, it seems to jump off the page. I mean, 50 to 60% end-to-end payment volume growth does suggest that they are rapidly taking market share. So I like to see that. Revenue growth of, let's say, 40%. This is their guidance for this year, I believe. That's also fantastic, suggesting they're taking market share growth. Really profitable. Around $600 million in EBITDA, $700 million. That said, there is a bit of debt, I believe around 1.5, 1.6 billion net debt. And so maybe a little bit less than that. And so there is, a couple of turns of leverage here, but not, I'd say not, the crazy amounts, and lots of free cash flow that this company is generating. So I'd say this is very interesting. And then the cherry on top of this ice cream sundae is that, his letters, which I just read this first one, I thought, wow, this is very accessible. I enjoyed accessible in that, he's making it easy for the shareholders to understand his thought process and, what's going on with the company. And he's talking about how, they explored selling the company. They received multiple offers at a share price premium materially higher than levels at the time of the review, and certainly where we are trading presently. So this is a huge cherry. You got the sprinkles too. You got a full ice cream sundae. I start the video with HIMS and semaglutide. I'm going to finish with, ice cream sundaes. Personally, my favorite ice cream sundae is from Friendly's on the East Coast. I don't get to go there enough, but hopefully this summer. And so, man, I love ice cream. I love Friendly's too. Vienna Mocha Chunk. And so, looking at Shift4 Payments, this, I'd say of the three, this is the one that's got me the most interested. And I think I'm going to do a further deep dive in a letter exclusively for my subscribers at Unrivaled Investing, because you've got the alignment, you've got recurring revenue. And I'd argue, you could say, oh, there's recurring revenue with SOFI as well, but, because it's a loan book. But it's trickier because if interest rates move higher or lower, you have to constantly originate new loans. Some of the loans, mature. I'd argue that's a trickier business than something like, shift 4 payments where you get these merchants and you're getting, you have effectively these toll booths, this payment toll booth, profitable. So I need to learn a little bit more about the debt, understand, what's the risk if there's a significant recession. Could that debt cause some significant heartburn? Would they be able to grow through that recession? HIMS, I've called out before. I'd say that one is also sensitive. Yes, they offer this subscription type business, but I'd argue management has over time provided less detail about their subscription, aspects of how sticky it is. And I've called that out before, which is that the first year after someone gets a subscription with HIMS, they generally stop, is my impression. And that the recurring revenue aspect that they do call out is actually after they've had a customer for like 2 years. And then they're like, well, after we've locked you in on this product for a couple of years, then it's very sticky. But so it's hard to actually get a gauge of how much is truly recurring in nature. But anywho, I overall, I think Shift 4 is probably the most interesting. And so I'm going to be, doing a deeper dive into the valuation. If this video talking about these 3 insider purchases has been helpful, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.